Hey guys, so in this video we are going to go over trading rules and a couple tools that can help you out during the week. So at the beginning of the week, we always want to check out news to see what is going on for the week. If there's any major news events, stuff like Brexit and major things that can happen in the world, like COVID's one thing, but again, it's been happening for so long that at this point, anything can happen. The numbers rise and then they decrease. Like you don't even know what's happening with COVID half the time. It's just up in the air. So we still want to check out news each week to see kind of what is happening in the market. Why I'm personally not a fundamental trader is because I don't really focus on the news and politics and all of that kind of stuff. Like I'm aware of what's happening in the world and it's good to be aware of what's happening. But when it comes to trading, I stick to just technicals because even though like these news events come out each week and they're pretty much the same. Like I said, if there's a major news event like Brexit, then that's a different thing. And you want to be careful of entering a position on major news. But with this kind of news, it just causes volatility in the market, which is what we want. But again, I always follow technicals. The reason for this also is because USD CAD, let's say CAD interest rate came out and they're expecting it to go up. If the CAD interest rate goes up, that means the Canadian dollar will be strong, okay? So if you're looking on your chart and the news is saying CAD is going to be strong, but your technicals are saying that CAD isn't going to be strong, then you're kind of gambling your trade. So fundamentals is kind of a gamble, where technicals, you know exactly where to enter and exit, stuff like that, right? So that's why I don't focus my energy on fundamentals, but it's good to be aware of what is going on each week. So that's what I look at first. You can look at Forex Factory. Of course, everyone knows that. So Forex Factory calendar, or you can look at investing.com. So what you do is you just hit the news button and then go to Forex and it will tell you exactly what's happening. Another good tool, kind of just like a extra tool, is a community outlook. So it kind of tells you how many people are in short positions and how many people are in long positions. So you want to do the opposite of what the majority is doing. So for example, last week everyone was short, or majority was short, has short positions on Euro USD. Well, what happened here is Euro USD was long. So from this entry point, it actually went up about almost 300 pips last week. So this is completely wrong. It's showing that majority are short when this was long. So you want to be against what majority is doing, if that makes sense. So you want to be where the banks are putting orders, the big market players, whatever you want to call them. And we'll get into that in a second. Another good one is this website. So basically it just tells you what's strong against the dollar for the week. So you just go to performance week and you can see this is the dollar. So CHF, Euro, and GBP are stronger against the dollar for that week. So again, another just tool indicator on what's happening. Another good one is this COT report. So what it is, it's just showing you what the market makers are doing. So if they're adding long positions and dumping shorts, stuff like that. So all you do is just go home and you can see the currencies, stocks, literally everything. And you can just click on the report and see what is happening for that week. So again, just another tool. So I want to talk about trading rules. So we're going to get into that. There it is. Okay, so trading rules 101 before you enter a trade. So make sure you write this down. Okay. So I'm going to write this down, and throughout the course, I'm going to go over everything that I've talked about. So before you enter a trade, always make sure that you have your trading plan updated. So you always want to make sure you're following it, because if you don't follow it, you'll just get in and trade randomly. You won't follow what your trading plan says, and you'll start getting losses, and you just want to avoid that. So my first thing is watch for a major zone to enter. Next is watch for patterns forming / formed. So double tops, double bottoms, and then obviously triple tops, triple bottoms, M and W patterns, head and shoulders, and inverse head and shoulders. Okay, so these are just extra confirmation, guys. When you see a head and shoulders, it doesn't necessarily mean that it's going to go down, which again, like I've talked about before, but I will talk about it again, because what can happen is the head and shoulders pattern can form, and then it could be at a specific major zone, and it ends up not breaking, and then it goes to the upside. So unless the head and shoulders neckline breaks and tests, then it's a completed head and shoulders, but you don't just want to go off a pattern. You want to have lots of confluences. So use daily to identify the movement. Okay. Look for exhaustion wicks. Watch for H4 closes and 2 H1 close. So H4 time frame and H1 time frame. Focus on round numbers. If you are entering a trade and the range is smaller than, I don't know, like 1, 2. I try to do minimum 1, 3, but I guess 1, 2 is fine. It all depends on your trading plan, like I said. But if you're entering a trade and the range is smaller than 1, 2, so if you're entering on a zone and the next zone is smaller than a 1, 2 risk to reward, you want to avoid it. Okay. Use H4 to identify key zones. So major zones, key zones, whatever you want to call them. Use H1 to watch price approach those zones. And then 30-minute and 15-minute, we're going to watch for 30-minute and 50-minute entries and rejections. Okay, so you need to also take into consideration what day and what time are you entering the market. And then, is there any major news events? Okay, so one thing about the major zones, why it's so important, I'm just going to make this a little bit bigger. Okay, so make sure you write this down. So why major zones are so important is because that's where the big traders, like the big market players, enter their position. So they risk the most amount of money at that specific zone. So if we're entering at that zone, it could be a really, really good risk to reward. So I know a lot of you have seen that usually my risk to rewards are again, 1 to 3 minimum, and they can last, like, it depends. Like, some of the pairs, like GJ, one of the entries I got was an 800 pip move. So again, it's taking those entries off those major zones and just letting it ride. So I will talk to you about that in the course, in the videos that I'm about to post. But this is what I want you guys to write down, and then again we will go over it in the course. Okay, so in the next video, I will go over major zones, and then we'll talk about everything else.